right, guys, wanted to take a minute to check in on the state of the housing market as we head into 2023. And as with all things in the economy, the picture is kind of mixed and a little bit complicated. Let's go ahead and put this up on the screen. This analysis from the Wall Street Journal, they say why this housing downturn is not like the last one. If you could leave this up on the screen, because there's a chart there on the screen that you can see the levels of equity this time around, even as we have experienced a huge housing downturn, including a decline in prices that started sometime around May, but you have much more equity with homeowners. So there are fewer people who are in the category of potential foreclosure. You have people with a lot more sort of, wiggle room in terms of their financial picture. Now, on the one hand, that's good. Obviously, you don't want people losing their homes, being foreclosed on. That's like a seminal event in people's lives. It's extraordinarily traumatic. It's horrific. People still have the scars and are still recovering from what happened last time around. On the other hand, the reason why people's equity is so high compared to their debt is because basically, at this point, you have to be rich in order to be able to purchase a home. So people who were able to purchase homes, who had the mass amount of cash they needed up front in order to get their foot in the door and compete with private equity and all these permanent capital players who are in the markets, by definition, are sort of financially better off. So it may mean that you're not going to have a mass foreclosure crisis, but you have another crisis on the other side of a total lack of housing affordability, which has obviously been wildly exacerbated and intentionally so by the Fed and their interest rate hiking.
Yeah, and I was actually looking right now, as predicted, even with the rise of interest rates and the tripling or quadrupling in some cases of some of the payments that the average person would have to make, the average price of a home has only dropped by like 1 or 2% on the overall index. So the price is staying stagnant while the cost is going up through the roof. So it is a complete crisis of affordability. Yeah, I don't really know what exactly people can do at this point. Like, and even we've talked about this. Well, with the interest rates where they are, you're actually disincentivizing even building new housing because a lot of builders are like, nobody's going to buy in this environment, or they're not going to buy as much. People are not going to leave their old house and buy a new one and finance it. So that means that both the price remains high and housing stock is actually arguably going to shrink as a result of all of this.
Right, and it's not just they're anticipating like, okay, people aren't going to buy, which is correct, and they won't be able to fetch as high of quite as high of a price because people won't be able to afford it. But they also have their own borrowing costs that they have to factor in as well. So as interest rates go up, if they're going to borrow in order to finance a big development or a big project, they're much less likely to do that just because it's monetarily makes a lot less sense. So what the Fed is doing right now really is exacerbating one of the core issues in terms of the housing market, which is just a lack of stock, and especially a lack of affordable housing stock. I remember seeing some statistics about how much of our housing now is, basically like the sort of suburban McMansions, the like upper middle class housing is the bulk of what is ultimately created. Or if you're in an urban setting, like the more high-end condos, there is so little what used to be called like a starter home. There's so little of that stock being created and which remains in existence. So for young people, for new families trying to get their foot in the market, this is a massive, massive issue that, there's no obvious solution in sight. And I do think it's going to continue to sort of roil our politics. And I don't think policymakers, I don't think that the press has really paid sufficient attention to it, because having a place of your own and having that sort of stability and security from having home ownership, the type of wealth that you're able to build then over generations. I mean, this is really the path to that sort of middle class prosperity. Having that cut off is really a seminal moment in terms of American economic history. It really changes our conceptions of ourselves, our conceptions of our society, and it's going to continue to be a massive issue going forward into 2023.
Absolutely right. It's one of those undercurrent sleepers that's just going to explode one day, and some of us told you so. There you go.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.